Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. After an event-filled Friday, markets settled in their familiar ranges, especially when it comes to currencies. Of course, now focus is on how economies are doing, not just in the US, but also in other major economies. Germany, for example, often considered as the sick man of Europe, continues to put pressure on the ECB authorities for further rate cuts. The IFO business outlook dropped to its lowest level since February. Morning, JK. A question for you. Now, when it's clear that central bankers are either heading into or are presently in a cutting cycle, do you think, given the economic scenarios in other major countries, the other central banks, especially the ECB, may outdove the Fed?
Good morning, Swaraj. Yes, we have a scenario where most of the central banks are in a cutting mode. In fact, on the eve of Jackson Hole meet, also we had similar statements from ECB and UK about rate cuts in September also. I think we have to differentiate because Europe is definitely in a much weaker position, as we saw the EFO numbers from Germany also yesterday indicated that the country is increasingly falling into some sort of a crisis. Info business outlook dropped to the lowest level since February, even with expectations worsening in both manufacturing and services. The institute's expectation of gauge dipped to 86.8%. So that was definitely something of a concern for the policymakers. It increases the chances of another rate cut, maybe more rate cuts. We also had, recently the wage inflation in the Eurozone also moderating, and the drop in recent wage increases has been much lower than the previous quarters, and that is also strengthened the hands of ECB in further rate cuts and boosting the economy. These factors have actually helped the dollar to recover against the euro, not significantly, but definitely well off the highs of 1.12 that we saw in yesterday's trading. On the other economic indicators, we had very few numbers from US. The durable goods orders was one of them, where the headline number was much stronger at 9.9% versus minus 6.6% previous month. But it clouds the fact that the major number or major increase came from aircraft orders. So ex-transport orders were actually minus 0.2% versus plus 0.1% last month. So it indicates a general decline in the manufacturing activity, which also another regional manufacturing index in Dallas region showed. So the slowdown in the manufacturing sector along with the job sector in the US is definitely on the decline. But to look at your question, whether others are outdoing the Fed, but ECB might or maybe at least match that of Fed. But in as you have seen in the recent data, UK and Japan are actually in a much better growth phase or recovery phase, I would say. That's why you have seen Japan actually hiking the rate and maybe on the pot to hike more later during the year. UK, of course, will cut in September because their inflation has dropped to near the target. But going forward, if the growth is strong or stabilizes much more, then UK central bank may actually lag behind in cutting the rate. So you might well have UK pound outperforming the others, in this phase. Yes, markets were in a consolidation mode. Yields were slightly higher, responding to headline durable goods orders. Also, there was a huge amount of month-end T-bill issuances by the Treasury, for which the response was muted. Hence, the yields went up slightly. Stocks were also mixed in both S&P and Nasdaq losing. But the important thing that the market in equities is looking forward to is the NVIDIA's report, quarterly report, which is due on Wednesday and said to be US stock market's most closely watched event of the week. So I think there's a huge scope for disappointment because expectations are quite high. So NVIDIA being one of the bellwether stocks for the tech sector in the US and in general for the US market also recently. So that's something that we will look forward to. But all that will be overshadowed by US data later on Thursday, by GDP number, which is expected to come higher at 2.8% versus 1.4% last month, or rather the first estimate. Then the PCE core price index, where we are seeing a small uptick as per the forecast, both in the monthly and in the yearly, just a 0.1% increase, with the way the market has discounted rate cuts and also, dovishness from the Fed, any slightly higher increase in the PC core index can actually, reverse some of the market's recent gains, as well as the dollar can recover a bit more as well. Quiet day today again, but we'll also, going forward, we'll also have German inflation numbers, Japan's Tokyo region inflation number. So the week is not actually, the second part of the week is definitely busier for the markets to look forward to, starting with NVIDIA's results. On the rupee, the gains on the currencies versus dollar post Powell speech did not see a lasting impact on the rupee. It moved as expected, finding support on its opening dip at 83.81 and traded a high of 83.91 with good demand. So we also have the GDP number from India for first estimate for Q2 on Friday, where growth is expected to actually moderated to 6.9% from a very impressive 7.8% that was seen for the first quarter of 2024. A mixed bag of data and a lot to look forward to for the week. More consolidation, I think. I think amid all this dovishness from the Fed and ECB, the ones to gain eventually should be gold and yen. Both are consolidating their strong gains of recent times, but I think supports are not very, rather the resistances for dollar and the support for gold are not far away from current levels. So more action in those segments of the market. Geopolitics is one more factor that will support gold, and even oil prices have once again got a support ahead of 76 for the Brent. So markets are not only looking at Fed but also other factors and the other central banks. Thank you.
Thank you, JK. And I think you summarized it pretty well when it came to my question. So ECB seems that looking at the condition, especially in ECB, the European Union and the Germany, seems that the ECB may at least match the Fed with cuts. BOE and Japan have their own relative strengths, which are playing out for them. So this theme may not work well for BOE or Japan. US durable goods, on the other hand, yesterday came in stronger when it comes to the headline number. But if you take out the aircraft orders, it actually does not show a good picture for the manufacturing sector. Going forward, we have the Japanese and the German inflation to look forward to. Second half of the week gets busier. And for rupee, gains in currencies against dollar did not see similar theme play out because it promptly weakened back to 83.90 levels from a low of 83.81. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.